It happens every single day. I sit down with a client. The cash flow issue is obvious, and the solution is right there. It's either the receivables need to be followed up on, or there's expenses in auto pay that should have been deleted 3 years ago. Maybe there's too much inventory. It doesn't really matter. I can see exactly what's going on. And my client will nod and say, "Oh, yeah, that makes sense. We'll do a process called a blood wall," which I love. And it shows them how much money they are wasting. They go, "Oh, wow. Okay, we need to fix this." And what used to happen was nothing. They stayed doing exactly what they have always been doing. And then they wonder, why isn't anything changing? Here's what went wrong. The problem was not about the numbers. It was about the mindset of the business owners and sometimes key employees that are behind the numbers. And until that change, nothing else changes. Stay with me until the end because I'll be able to give you one key action item that you can take this week to become a better advisor for your clients. And you'll become more confident in the process. I'm 𝗿𝗏𝘆 𝗖𝗏𝗍𝗂. I'm the founder of 𝗨𝑐E_HES Learning Systems, and this is Cash Flow Confidence Live. When a business has a cash flow problem, there's always this expectation and a surface explanation. The receivables, and I just mentioned a few, right? The receivables are too high, or there's too much inventory, or they don't have enough sales. Margins are shrinking. You can see in the reports, and we need reports. But what the reports will not tell you is, why does the problem exist? Or why does it keep happening? Even after I point out, or another an advisor points out, hey, this is what the problem is. This is how you fix it. Now, I've figured out, stick around, because I've figured out how to implement change, but without a concentrated effort. And one spark that I'll be telling you about, the business will keep going because inertia is a fundamental law that things will keep moving in the same direction they're moving unless something hits their path and gets them to deviate. The concepts are not accounting concepts, and they're not accounting problems. They are human problems. And they won't be solved by a better spreadsheet or better ratios or better numbers. They'll only be solved, these cash flow problems, when the person running the business and their key employees start to think about cash differently. And that's where I come in, and that's where you come in. The cash is clear mindset is the first part of the cash is clear framework. And the mindset is simple: think cash, not accounting. That is the first part of a 5-step cash is clear process, which is mindset, model your money, manage your money, then go out and mentor, and then maximize. And hopefully I got all 5. That's it. It's simple, but that mindset has to change. And quite frankly, it changes every step of the way. If the habits don't change, then that's the other obstacle, because once you deviate, you have to form new habits through new systems to keep moving in that direction. It is very simple because people do not like to change fundamentally. It's uncomfortable getting advice that your business has an issue that's deeper than you think it is uncomfortable. And if the owner doesn't believe that it matters, or the owner doesn't internalize that they've got an issue and actually want to change, nothing's going to happen. So, how do you deal with the mindset shift and how does it look in practice? It starts with the focus. And most of us, I'm not an accountant, but I went to business school and I was trained in accounting. So most of us are trained in accounting, and business owners, if they have had any financial training, are trained in accounting. And they're trained to think about how money flows through the accounting system. And accounting is historic, and the accounting statements tell history the way that accountants want it to be told. Oftentimes, it is fictitious. One example, according to accounting, when you ship an order, that is when something is sold. Now, it's accurate from an accounting perspective. However, for a business, especially small businesses, something that's shipped is a promise to get paid, unless they've paid in advance or paid it, when it leaves the factory, obviously. But when you're dealing with receivables, they, as a small business owner, need to know when the money is coming in the door. That's reality. Reality is it's shipped, and reality will be that money will be deposited in the bank. This concept of revenue due to shipment, that's an accounting theory. And you can show a huge profit on paper and have no money on the bank, in the bank. Let me repeat that. You can show huge profits on paper and have zero cash in the bank. Conversely, you can have big losses and have lots of money in the bank. A prime example of big losses with lots of money in the bank would be real estate. This is why so many people are out there saying, get rich with real estate, cash flow real estate, especially when it's paid off and you don't have a mortgage and you've got rents coming in, but depreciation causes a loss. That's a whole industry built around losses with big cash balances and positive cash flow. So when you shift from asking, are we profitable, to do we have cash in the bank? When is the cash coming in? When do we have to have it leave the bank? And you shift from, you stop thinking accounting and you start thinking cash. That's a huge mindset shift. And when owners start doing that, they start treating not only their bank balance as a management tool, because that's not a great idea to use only your bank balance as a management tool. What you're using that as is a beginning of how much is in the bank today, combined with a cash flow model that fairly accurately predicts, based on history, when money will be coming in and when it's going out. That's a whole huge mindset shift. And I've seen it in a business owner just understanding what that model is. They don't know how in the world it works. But I've sat with a business owner, explained it for about an hour, what his business cash flow model looks like. And when we met again the next week, they'd had their best revenue week ever, because he started thinking about, how do I generate more cash? Not just how do I make more sales? That's when the real mindset shift happens, is when they see change happening and they like it. And people gravitate towards things that they like and away from things that they don't like. And most business owners do not like low bank balances. But I want to make sure I'm 100% clear. This process is not comfortable. Changing your mindset is not comfortable. Changing the way a business owner does business is not comfortable for them. It is not comfortable for their employees. And sometimes it might not be comfortable for you as an advisor. Owners have built their businesses around certain practices that people aren't telling them the reason they're in business. Nobody's telling them what to do. And so they like it like that. And telling them that the way they've been thinking about money might sound like a criticism and it might even sound threatening. If it lands that way, you've lost them. That's why an advisor's role is to mentor and advise, not to lecture, to illuminate the situation, not to denigrate or not to criticize the situation. A matter of fact, one phrase I use over and over again is, I want you to know this is absolutely normal, that many business owners are not taught this. And that's why I'm here, is to help you understand that what you're dealing with, there's thousands, hundreds of thousands of other business owners going through the exact same issue. It normalizes the situation, and it's the opposite of criticizing. It's helping them say they are okay and they are a normal person for thinking along those lines. It's not their fault. Even if they went to school, they were trained in accounting, not in the stuff that we're sharing right now and that you are internalizing. So, how do you implement this from a practical perspective? You ask questions. You don't provide conclusions nor solutions. You ask questions that help lead your clients to their own conclusions. For example, instead of saying your receivable process is wrong, or your receivable process is killing you, or your receivables are too high, anything to do with criticizing the receivables, you can ask instead, so tell me about your receivable process. And then they can talk to you, or maybe they'll tell you they don't have a process. Real story. I asked a business owner, hey, please, Wally, tell me what your receivable process is. He looked at the accountant, or the CFO, which is the bookkeeper, and said, so what's our receivable process? And the response was, we have a process. We send out the invoices. Am I supposed to follow up? The accounting person was new. They had never communicated this. They didn't have a process. All of a sudden, just by asking the question, do you think they had a mindset shift? Do you think the business owner wasn't beating himself up? Do you think that the accountant wasn't embarrassed? That wasn't the purpose of asking the question. It was just a question. I had no idea that that would be the answer. But they internalize it quickly and easily. When you get embarrassed, you don't forget about that. When you feel and you start beating yourself up, you don't forget about that. And so, an advisor, I didn't even have to ask, do you want to put one in place? They said, well, what are we supposed to do? And that's the opportunity that I took to say, well, let's just start out. And we did ABC, which was make a phone call, ask if they know that they've got a payment, and ask for it to be sent if they haven't. Oh, and by the way, underlying all that was the mindset of, these are clients and you want to keep them as clients. The result of that quick conversation, and we're talking it took 5 or 10 minutes, was that about $45,000 of past due receivables, a lot of them 90 days past due, were brought in just a couple of weeks. And this is from a total receivable probably of about 90,000. And didn't mean the receivable was cut in half because they had new sales. But the important part was cut way down, and that was over 90 days, over 60 days, and the over 30 days. That's the type of reaction you're looking for. And when you ask questions and you're getting to that mindset, the change not only happens, that deviation that we talked about, the inertia gets bumped and it keeps going in that direction because it's a hard bump, not just a nudge with your elbow. So, the advisor, and that's you, when you change the mindset, you win. And it's not going to come through the numbers, it will come through conversations and through questions. When you sit down and you explain this to clients, whether it's the modeling or managing or ask questions, and you have that type of a genuine conversation, that's when you become trusted. And as they follow your advice and have these realizations of their own, that is when you become an irreplaceable advisor. You'll get the first call when something goes wrong. They'll open up to you quickly instead of having to massage the situation and massage egos. They know they can trust you. And that's also when they send you to their friends and say, hey, listen, David, in this case, my name's David. They'll say, David, help me out. He might be able to help you out with your situation as well. Business owners know other business owners. And you can charge a premium for your monthly fees when there's referrals. And when you have the confidence to say, I know I can fix your problem, and it's going to be worth 10 times what you're paying me each month. It starts with understanding the real reason cash flow problems don't get fixed is because not there's a missing strategy, but because mindset needs to be changed. So, if you want not one or two or five or even 10 great strategies to get started with, and these are all strategies your clients control, they make the decisions, and they're spelled out on how to implement them, well, then go get my free ebook that I wrote for advisors getting started, but also for advisors who've been around for a long time. These are not the usual strategies. I've got 230 plus strategies, and I've pulled out 24 really good ones. You've heard some of them, other ones I can almost guarantee you haven't. And find out more about strategies. Get it at at 𝗫𝗍60.com. That's 𝗫𝗍60.com. If you can see at the bottom of the screen that's scrolling by, that's where you get your ebook. I'd like to shout out to Pivot, the Unconventional Cash Flow Conference. That is the sponsor of our show today. If you want a 4-day boot camp, actually, it's a 4 half-day boot camp, because the other half of the day you get to think, you get to understand what you've learned, how to implement it in your practice, then go to pivot2026.com or contact me directly and I'll tell you more about it. It will be 16 weeks of mastermind sessions compressed into 4 days. That's it for today. Oh no, I promised you one good thing to do. So here's your action item this week. Choose a client and ask them one question. Which question? Ask them, what happens? What do you think about? And what do you decide you need to do when the bank balance drops? What's your first reaction? If they answer something along the lines of, well, I got to get more sales, or I need to get a new loan, before they say anything about managing what they have, meaning that they realize they have receivables, or they realize they have inventory, or they realize they have other assets, that's a key mindset gap. And that is a wonderful starting point for having a conversation. Don't go to a spreadsheet, have a conversation. That's where the advisory works begin. And of course, when you have the conversation, you keep asking gentle questions, but pointed questions that help them understand there's opportunities within their business to have strong cash flow and have a strong, profitable, but also cash flow positive, cash flow in the bank business. I'm 𝗿𝗏𝘆 𝗖𝗰, founder of Cash is Clear Learning Systems, and this has been Cash Flow Confidence Live. Be the confident cash flow advisor your clients want, need, and deserve.